I'm muting again. Ah. So we can proceed, eh? Alright, so we are going to look at how to choose high probability entry levels. First and foremost, before choosing our entry levels, we have to be having a few things in line. First thing, we have to be having a key level, a fresh key level, mind you. So we know that we look for our key levels on higher time frames in order for us to have that strong direction. So for example, we can be having maybe a monthly key level or a daily key level or a weekly key level, but as long as it is a key level, a higher time frame key level, and it has to be fresh. Then the next thing, on that very time frame, we need to be having a rejection. Okay, hold on. So let me list them down here very quick. A fresh key level, a rejection, a time frame lower breakout. Lastly, this is optional. It can be there or it can't. That is liquidity, probably. Liquidity or inducement. So this is optional. Okay, so we have to be having a fresh key level first and foremost, then a rejection. So I'm going to use our traditional colors, that is green and red. So for example, this is our bearish and bullish candle. This is our bearish candle and this is our bullish candle. So in such a scenario, for example, we are having this week here as the week of rejection, or it is the week which rejected. So now we are having so far two of our criterias in line. So first we are having the fresh key level, then second we are having a rejection of that key level. It has to tap and it rejects and it has to close. Okay, and it has to close. Understand? So after us having this key level being fresh, and then we are having a rejection on that very time frame. So for example, this is a daily fresh key level. We are having a daily candle rejecting a daily fresh key level. So that is probably the daily rejecting daily. Then we go to a time frame lower. I'm going to consider daily here as an example. Daily time frame. Then we shall go a time frame lower to look for a breakout. So it can either be breakout type 1 or type 2, but since we are looking for high probability, we shall only consider breakout type 1. So a time frame lower, that will probably be our 4 hours time frame. That will be the time frame lower. So after you getting your daily fresh key level, and then you are having that daily candle rejecting that daily fresh key level, later on you go to the 4 hours time frame and you look for a breakout. So 4 hours will look something like this, something like this probably. All right. So 4 hour will be like this. So let me make this a little bit thicker. All right. So here, this is our 4 hours structure. So this is a higher low, a higher high, a higher low, a higher high, higher low. Sorry, this is a lower low, lower high, lower low, lower high, lower low. So we probably know that we are considering bodies, not wicks here in this scenario here. So our breakout type 1 will be this. Those people who know about breakouts. So this will be our breakout type 1. So this is where our emphasis is. Oh, this is the main topic for today. So right now we are having 3 of our criteria in line. We are having a fresh key level, which is a daily key level. We are having a daily candle rejecting a fresh daily level, that is the daily rejecting daily, and then we are having a lower time frame breakout, that is the 4 hours time frame breakout. Now we are looking for liquidity or inducement, but before kicking into this, now look here, we are having the apex as our first entry, and then potential entry, right? The apex as our first potential entry, and then we are having the QM as our second potential entry, and then we are having the RBS as our third potential entry. And maybe we can be having an OCL here and also an OCL here. Now a lot of people have been asking me when they land on such scenarios what to do probably. So there are normally 2 ways I deal with this. There are probably 3, but we shall talk on only 2. Only 2. So this is 1, 2, 3, 4, 5 entries. Whenever, this is the first way to deal with this. Whenever you find yourself in such a scenario, when you are having 1, 2, 3, 4, 5, there are more than, whenever you find yourself in such a scenario, when you are having more than 2 entry points, neglect all the first ones and focus on the last 2. So if it is me, I will neglect this one, and I will neglect this one, and I will neglect this one also, and I will focus on this and this. But this is not the professional way to deal with this issue. Yeah, this is something amateuric. So if you are an amateur, you can use this. I'm not using that word to criticize anyone, but there are people who don't want to waste their time playing a lot of games. You understand? Yeah, you can use the apex as your best resolution. So you can focus on these 2 and you can execute on the apex. If it reaches there, well and good. If it doesn't, you can miss out. But somebody who is professional, he knows what to do and what to deal with. So it is something we are going to look at right now. So what do we do if we find such a scenario? I've said you can neglect this. This is the simplest way. That is why I'm saying it is so amateuric, because it is very, very simple. Yeah, it is the easiest. You delete this, and then you can set your entry here on this. And I'm going to show you the types of OCLs we can consider if we are to consider an OCL for an entry. So you can enter of this OCL, and then your stop loss slightly below here, and then you target what you have to target. That is the simplest or the easiest way. So let us go to the second way. This is how you have to do now. First thing, the second way, you follow now the 4th criteria, liquidity or inducement. So let us learn a little bit about the engineered liquidity or the engineered inducement. So we can find ourselves in a position when we are having something like this. like this, we know the structure types. So we can be having structure type 1, this is structure type 3, this is structure type 2, and this is structure type 1. For the structure type 3, it is more of a continuation. We shall use this RBS because it will be the nearest key level, or it will be the key level nearest to liquidity. If it is structure type 2, it is something like this, maybe. Yeah, something like this. It is more like an inside formation. Yeah, but this will be used as liquidity. We can enter from here. If it is somewhere higher here, we can enter from here. But the main thing behind this is we have to focus on liquidity. Liquidity helps us in which way? It is going to show you the correct or the high probability level to use. So what is that highest probability level to use? It is that key level next to liquidity. So if we are having this as our liquidity or inducement, anything, but this is liquidity probably, but you can call it inducement either way, no problem. So if this QM here is here, let me mark it, and then we are having this apex also. So we cannot enter from this. Listen, there is this RBS here, up here, and another one is here. So if we find price up here, you understand, so it is going to retrace. Now one will say that, okay, for me I'm going to execute from one of these two, you understand, or exactly there is something here, it is a support, he can decide to enter from that support. That is all wrong. Why? Because we are having liquidity. Liquidity is showing us that before price continuing up, it will first come for this liquidity and then it continues. Remember, the market always moves from internal range liquidity to external range liquidity, and from external range liquidity to internal range liquidity. So there is a reason as to why market left this liquidity here or created this liquidity here. So after price creating this liquidity here, it will surely, when you get 10 setups like this, you will find like 7 or 8 when price came back and took out this liquidity, and then 2 or 3 when price stopped here and it continued above. But most of the time, once it creates this liquidity, it will take out this liquidity, tap the nearest key level to liquidity. Most of the time you will find OCLs here, but we don't consider OCLs most of the time. I'm going to show you the type of OCLs we can consider if we are to take entries from OCLs. Then in this scenario, we can enter off this QM because it is the key level next to liquidity. So we shall mark this as our liquidity. Majorly, if people see most of my screenshots, when it comes to entries, I mark liquidities. I use this dotted line here or dashed line. But price will sweep this liquidity, tap to the nearest key level, and then it will proceed. I'm having 2 or 3 things to talk about when it comes to liquidity, but I'm going to first talk about the engineered liquidity or engineered inducement, and then later on I will talk about the session liquidity. The session liquidity is that liquidity which aligns with the daily trading model. So our daily trading model majorly is something like AMD. We wait for Asian to accumulate, then that Asian session will work as our session liquidity. I'm going to explain further on that one. It is probably one of the confluences we use for an A+ setup. So if liquidity is here, when it is not there, when it is somewhere here, we will not use this again. No, we will wait for price to take out liquidity and execute from this level of support, or it is called the apex, because it is the key level next to liquidity. So if it is an OCL, now it is time for me to talk about the OCLs. If it is an OCL, we don't need to take entries of OCLs which are here on this wing here, the front wing. We need to take entries from OCLs which are on the back wing. Yeah, I'm having a lot of messages. I don't know from... Okay, we can continue. All right. So I am saying, if we are to consider OCL levels, all I'm giving out is high probability. Calvin is requesting to record there. No, we don't. Calvin gende mpavu. No. I'm recording this and I'm going to drop it. It is going to be the first time and the last time for me to record. Whenever I schedule a meeting, if you don't appear here, well and good, you shine. So I was saying, I'm recording this and I will drop it in the group, maybe, inshallah. So if we are to consider OCLs, we don't need to consider OCLs from the forward wing or the front wing. We need this back wing. So do you know those OCLs which are more like QMs, but they are OCLs? Those are the types of OCLs I'm talking about. So let me illustrate a little about that. This here has to be red. These two red, and then finally a green one. Let me make it more interesting. So I think each and everybody here, or each and everyone who is not new to SNR, he clearly knows something about OCL levels or the open close levels. Sorry. So these are the wicks. So we probably know when it comes to SNR, wicks matter when it comes to rejections or making key levels unfresh, but when it comes to other criteria, they matter less. So this is something I'm talking about. So this structure I've drawn here, it is this structure here. Kindly. It is this structure here. So I'm talking about this level, this line here, it is this level of support here. Here, that is our apex. And then this one, which I have marked, we are yet to find out. So I'm talking about OCLs. This is the forward or the front wing, and this is the back wing. So this forward or the front wing is having this OCL. We don't use these types of OCLs when it comes to entries. They are highly prohibited, not because they cannot hold price, but they are low probability. And I've said whatever I'm talking about today is all about high quality or probability. So these are the types of OCLs I'm talking about, the back wing OCLs. Why am I talking about this? If we had another one, kindly hold on a bit. Okay, so if we had another one here, I'm not talking about this. Why? It is a back wing OCL, but why am I saying that? Okay, I'm not talking about that. The OCLs I'm going to be interested into, they have to be the OCLs created by the last candle due to that nature. What do I mean? So the nature is bearish here. So the last bearish candle before the bullish candles. So it has to be something like an order block. So if you clearly look at this OCL, it is marking the edge of this order block here. You understand? So this is our order block, and this OCL is marking the edge of this order block. You understand? So this is the type of OCLs I'm talking about. Whenever you see this, that is why most of the time you will find people waiting to enter of this apex or the support, and then price will come, reach somewhere here, and then it continues. One will say, man, guy said we don't use OCLs, but price was held by an OCLs. These types of OCLs are high probability because first and foremost, they are more like a QM, and then they are overlapping an order block, or they are in line with an order block. So most of the time they will hold price. So once I see this, I just take my entry like this. I place my entry there on that OCL, and I don't put my stop loss here. I know I'm at risk. Guys, am I making sense, or we are lost already? Yo. You're making sense. Alright, so we continue. I will not be focusing on this only. I will not only be focusing on this, but I will also be focusing on this also. You get? Who is marking? Huh? So I will also be focusing on this. That means when I'm placing my stop loss, I'm not going to be viewing the messages if, no, it will ruin the video. So if anybody is having anything to put across, you can slightly call my name, you utter out your view, then we proceed. So I was saying, I will be knowing that I'm having this key level and I will be having this key level as well. So my stop loss will cover both this and this probably, so slightly below here, but we are not on that topic today. So this is my point. The point is, this is the type of OCLs we have to focus on to. These OCLs which are on the back wing, and they are of that candle that made the order block. I'm seeing messages popping, so let me read like 2 or 3 maybe. The session just started. These are old conversations. Alright, so let us go back now. Let us go back to this. Now I'm going to talk about the engineered inducement. We are having less time here, not more than 10 minutes I think. But if we are to proceed, we can create another one and we run up to midnight. So I've talked about this now. Now I'm going to talk about the scenarios when you will find that we are not having any liquidity. You understand? Okay, I didn't talk about this, I think. I've talked about how to enter on a QM. I've talked about it because we can be having such liquidity. Then if it is taken, we enter from the QM. I've told you how to enter off this OCL or this apex when we are having liquidity lower here. We call it structure majorly, me and my people. So now if liquidity is up here, sorry for this, if liquidity is up here, we are going to enter off this RBS because it is the key level next to liquidity. What makes this high probability? If it is overlapping a fair value gap here. If it is not overlapping a fair value gap, it doesn't mean it will not hold. But to make it more interesting and high probability, the key level overlapping a fair value gap, mostly you will find when it is an RBS or an SBR or a QM. If they are overlapping a fair value gap, that is making them high probability. If they are not, still they can work. So that is another confluence. So if you find your liquidity like this, boom, you can take your entry off this. Now there will be a scenario when there is no liquidity. When there is no liquidity, like this. So you find yourself in a position when you don't have liquidity. So we have looked at criterias or scenarios where we enter when we have liquidity. So there will be scenarios when you don't find liquidity anywhere. So we do have what we call the engineered liquidity. So the problem is, okay, we are only having 10 minutes remaining. So that means that exactly 54 minutes we shall be concluding. So I'm saying the problem is one, we are not having liquidity. The solution is engineering liquidity. So if the price or if the market is not having liquidity to take before triggering the orders, it will engineer liquidity in order for it to take out that liquidity it engineered and triggers the entry. You understand? So how does price engineer liquidity? Do you see this move here? From here to here, this is the move we are going to pay attention to. So you will slightly bring your gun box. I will not look for that one. I will just measure pips. That is what I do if I don't have that energy to look for the gun box. So from here to here, probably this is okay. I'm only going to consider these first two numbers. So this is 14. So 14 divided by 2, that is probably 7. That is the 50% of this whole move. So you will bring your gun box, measure from here to here, mark the 50%. So if price retraces to the 50% of this move here and it gives you that slight move somewhere like there again, you understand, this here, it is called the engineered inducement or engineered liquidity. So price was okay, the market wasn't having the liquidity or the inducement to take. What did it do? It retraced to the 50% of this whole move. Retracing to the 50%, that means it has engineered liquidity or inducement. So from there, we shall mark this as our engineered liquidity. Remember, if it is not engineered, it will break here. It will break here. If it is engineered, it will not break. But to consider this, it has to be, the retracement has to be at least up to 50% of this whole move. You will find one marking something like this. Yo, I'm having my engineered liquidity here. This is probably wrong. You will find yourself in a position when price comes to your entry, maybe this one, because you considered this as your engineered liquidity, it will tap, give you a little move, continue lower, give you a little move. Now this is probably the engineered liquidity or inducement, because it retraced to the 50%. So you will be taken out here and you will say that the strategy doesn't work, but you don't know how to correctly follow the rules. So here you will wait for price to take out this engineered liquidity, enter off the next key level after price taking out the inducement or liquidity, and then you target where you have to target. So that is the second scenario. Hopefully I'm done with the second scenario. So I can have something like 3 or 2 questions before we proceed to the third scenario. I think for the third scenario, we are going to make another meeting, which will be at least 20 minutes long. Am I having any questions, or I should proceed? The questions will be later. Jakuba omuntu yeebase wano oluyi.
You could show us more about the gunshot.
Huh?
You could show us more about the gunshot.
I do. The gun box. Okay. I didn't want to, but no problem. So this is the gun box. You can find it, I think, maybe here. Yeah, this is the gun box, and I will share the gun box settings. You measure from here to here, so it will just give you the 50% level. Once price retraces to the 50%, well and good, it has engineered liquidity for you to use. If it doesn't, sometimes, you know, price can't be perfect. It can retrace to maybe 48%. That is valid also, but it is better or high quality, at least more than 50% or 50%. So that is the gun box. I think I've showed you the gun box, and these are the gun box settings. You can clearly take a picture, or let me take the picture and I send it to you. You only leave these 3 levels only, no problem. You can catch this slightly. So here to 0, here to 1, and here to 0.5, nothing else. You untick each and everything. Top labels, you leave it on. Bottom labels, you leave it on. Background, you leave it on 0. If you want, you can put it there. See how it looks like. Okay, it is not visible still because I don't have colors there. But if I did, colors would have been there. Okay, it is this, maybe. Yeah, but majorly, I like it. See, this is not clean to me, and I prefer clean. So you just have to leave this to 0 also, the opacity for the background. So here on 0, here on 1, and here on 0.5. Let me take a picture here using my phone. I will share it in the group. That is for the gun box settings. All right. So we're having 3 minutes here. Let me talk about something quick here, such that we will not spend a lot of time on the next session. That is all about these entry criteria. So let me talk about the daily trading model before doing anything else. It is more like this. I will wait for the early morning until like 10 in the morning to accumulate. Then either way, so if I'm having my daily rejecting daily downwards, then I'm having my breakout. Okay, let me do it like this to make much more sense in about 3 minutes. So I'm having this as my breakout, this as my breakout. So immediately after the breakout, another day maybe opens, you understand? Or that very day it opens and then it breaks out. Then I see something like this. This is our daily trading model always, and it is high probability most of the time. Those who know it, they do. So from morning up to around 11 sharp, I would like to see something like this. That will be my Asian session. So I would like to see my Asian session accumulating. Then after the Asian accumulating, so majorly see something like this. So that is my Asian session, right? So here, if this is my Asian session, then look here, I'll be having 2 key levels to look onto, maybe 3. I'll be having this QM here. Then I'll be having that left shoulder QM, sorry, the OCL, and then maybe the apex also. So on this perspective, so I'm going to just follow my daily trading model. How? I'm going to follow the accumulation, manipulation, and distribution. So I'll be waiting for something like this. Now I'm having my Asian range. Now I'm having already liquidity here. Engineered or not engineered, this is session liquidity because it is Asian session liquidity. So it is session liquidity. If that session liquidity is being taken out, I will execute off the key level next to this session liquidity. So this will be my manipulation and I will enter on the distribution. That is all. So let me save this video and then we run another one for about 20 minutes whereby we shall look on examples also.